Hello everyone, this is Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of May 13th. Lots of interesting stuff going on out there. A couple conflicting signals which still make me a little cautious, but then we also have some good signs. I'll discuss that. And so let's get to it. If you're ever wondering where this page is, if you're watching the video, if you go to TradeThatSwing.com under stocks, stock market analysis, and trades, you'll see it there because this page is updated each week. So each week I go through the same process, just helps me decide whether I want to be going long, short, and how aggressively. There are some watch lists you can check out. The best swing trading stocks watch list for May is high momentum trades, the current stock watch list. I haven't updated it recently because, as we'll discuss, I have not been trading because market conditions weren't that good. And these are some longer term trades, and why I throw these in here is because people will sometimes, or not people, I will also do it as conditions improve. If there's a stock that I really liked from, let's say, one of these buy and hold lists or buy the dip stock list or long-term dividend stocks, if there's a stock I like from those lists, as conditions improve, I can use that as basically my buy signal and maybe pick up some of those trades that I've wanted to pick up for a while as conditions improve. So that's why those are there. Let's take a look at the price action. We can see all these indices. We have a couple different ones looking at little different segments of the market. The NYSE Composite, a very broad measure of stocks because it includes stocks from lots of industries, different sizes. The NASDAQ, what many people consider a little bit more technology-based. The S&P 500, just the large caps in the U.S. The Russell 2000, the smaller capitalization stocks. We have a Canadian index, more commodity-heavy. And then I have Bitcoin and gold miners and gold. So the stock indices, you can see they're pretty much all in similar shape. We had this bigger correction than what we've seen over the last several months of this rally, and bigger corrections generally lead to a little bit choppier trading. Nothing's 100%, but when we do have a bigger decline, we tend to get a little bit more choppiness. Now, how that could play out is that we get back to these prior highs, but then we fall back and we form a little bit of a range because that selling coming in tells us something. It says there were sellers coming in, and even though the buyers have been able to bring it back up, that bigger decline is a bit of a warning sign for me. So what that means is you're looking at a decline that's bigger than the declines that have occurred earlier in the rally. Canadian stocks bouncing quite quickly, and you can see that decline pretty similar to some of the other ones that we had during this rally. So not quite as severe there, a little bit more severe here in these other indices. So all recovering, but not quite at their all-time highs, and we're not really in confirmed uptrend at the moment. So that's just a little bit of a knock against being very highly aggressive on the long side. Bitcoin, we've talked about this for well over a month now. It reclaimed its prior high at 69,000 and has been chopping around, and that has been the case on prior circumstances. When this has happened, it tends to chop around for at least a month and sometimes longer. It has resumed to the upside, but if this were to continue to decline, I would cut my positions. I'm on side right now, so not too worried. Got in fairly early in this rally and added a little bit on this when it had dipped below and then started to recover. So we'll consider that. If we start really dropping below these prior low levels, then we'll look to shave and then maybe add some back if it starts to recover again. The gold miners, last week we had talked about how we had this little high here and then this little high here and then this higher pullback. So if we saw some strength come in, that'd be a good sign. And we did see that late in the week. We had this little island here, and then we started shooting up. So that's a positive sign. It's also positive the gold miners are leading gold. We recovered to that prior high. You can see gold well below its prior high from April. During big bull markets for gold, you want to see those gold miners rallying at least as strong as gold, and this is not percentages, it's more comparative to highs and lows, its own highs and lows. So like we talked about here, it's recovered to its prior high, gold's still below. So that shows strong investment in the sector, people like it, and that generally leads to favorable gold prices. As that gold trend progresses, if we start to see the gold miners act weak, they can be a bit of a forecasting tool because they'll often start to weaken before gold will. So the fact that they're strong, could be some more left here. Of course, always trade just your setups or your strategies. Let's look at the market health indicators. And these give us a bit of a look of what's going on under the hood as opposed to just looking at the price action. This is the S&P 500 chart. We've looked at it before. We are recovering after this little bit bigger decline. So we had, going back to November, basically this rally started. So this was the biggest decline since then. That's about 7 months or so. This I still kept as a neutral face. We are technically in smiley face territory because we're above 50, but we're just barely above 50. And then I also kept it a little bit neutral because we had those other concerns. There's one other concern I'm going to talk about when we talk about the sectors. So 57% of S&P 500 stocks are above their 50-day moving average. A 50-day moving average, just a very crude measure of uptrends. Generally going to be easier to make money when you're in areas like this. Most stocks above their 50-day moving average, and you have these nice long periods of moving higher. You can see it got choppier in here as most stocks, only about 50%, just kind of riding that line not above their 50-day moving average. Again, over here tend to rise. We would avoid this entire downtrend here by looking at this indicator. So it's fairly good, I find. And right now we're just creeping above that 50, so that is good, but we do have some other concerns out there, but that would be a neutral to just starting to turn good signal there. This is how the percentage daily movement of the S&P 500. Bear markets are volatile and tend to see big drops in single days. You see 2% drops in single days quite often. We have not had one of those in a very long time. You can see the price not very volatile, just small daily movements, and we see this on here too. We had a little bit bigger sell-off, but not a 2% one, and we recovered very quickly from it. So this one's still good, showing overall bullish market, or at least not any bear market activity yet. As soon as we get one of those 2% down days on the S&P 500 in a single day, that's usually a warning sign that big selling pressure is coming in. This one was really good. We discussed this last week. It's got the tongue hanging out of his mouth because we like this. This was a bullish divergence. This is the NYSE advanced decline lining. Advancing stocks minus declining stocks is a cumulative number. And we had a high over here, and then we eclipsed that the prior week. Even in last week's video we did. What that does is it's a very high percentage of the time when that occurs, the S&P will also move to its high. So this went to a new high. The S&P is also trying to do it. Now it's very close now, so it's not really important anymore. Last week it gave us a little bit more information that, hey, the price could push up toward this prior high. Now I'm more concerned about the other things, but this is still moving up quite well. So, still in good shape. This is up volume divided by total volume. We're looking for very high values or very low values. A high value would mean most of the volume that occurred in a day occurred in advancing stocks, while a very low value would mean that almost no volume occurred to the upside because it was all the stocks were moving to the downside, so all the volume occurred in downside stocks moving to the downside. We haven't had any really low or really high numbers. I'm basically looking for 90% or 10%, and we haven't had any of those recently, so it's basically neutral. Another indicator we can look at is just how many quality setups have there been and how are they working? I haven't traded recently, so I have no idea, and I won't know until I run my scan. And when I run my scan, I can look. I'm looking through the stocks and I'm seeing how they've acted recently. Have they broken out and continued to run? That's a good sign. If I'm seeing a lot of very choppy stocks that formed setups and then broke out and then just failed right away, that's not a good sign. From feedback I've been getting from traders, even though we've kind of had a little bit of a run recently, I would say it's been overall fairly rough for anyone who has been trying to go long, other than maybe the last few days. So here's one thing that I found interesting is that when we look at the sectors, everything was pretty much strong last week. But when we look at overall, utilities the strongest last week. So on a pretty up week, you can see doing pretty well recently, moving up on the indices and over here, getting a little vertical there. Utilities were the strongest. Utilities are generally a defensive type sector that does well during near market tops and as the market starts to decline. So the fact that we have utilities top on the 1 week, utilities top on the 1 month, and over the last 3 months, that's interesting to me. It indicates a defensive posture from market participants, and defensive posture is generally not good for really strong upside because people are not willing to buy the more speculative things. When the market's really strong, people are basically buying anything they can get their hands on, and they're willing to take bets in a lot more like things like technology or some of these companies that don't have as much earnings. It's more projected out that they could be profitable someday, whereas utilities are companies that we pretty much know their cash flow. They're utility companies, so they make money, they're steady, and the fact that people are really buying these up at the moment, that tends to occur later in a bull market cycle. So that is also a little bit concerning to me, and nothing else really stands out. Maybe financials up here on the 1 week, financials up here on the 1 month, financials here on the 3 months, but nothing's really outstanding on any of or all three of these time frames. So that's a little bit concerning. So some interesting stuff happening out there. We have some good signs, we have some bad signs. What does that mean for your trading then? Well, if it's not great, that means it's not easy money out there. I prefer to keep it on the sidelines. If we have conflicting factors, I'd rather just stay out. And a lot of people want to, they'll pick the one good thing and say, well, I'm going to go for that. And as I've mentioned and as I've heard recently, lots of people have been kind of struggling in the recent market environment. So I'd rather just stay out and wait till things look better. It might only be several times a year that we get really good market conditions, but if you can hammer it hard in those times, you're going to do very well. And then if you can keep your money when things aren't so clear, a little bit murky, then you'll have all that money there for when conditions turn good again. As well as your psychological capital, because a lot of people get really beaten down when maybe conditions aren't as good. They take losses, they're just spinning their wheels, and then when the good conditions come, they lack confidence and maybe they've lost some capital and they're not really there to fully take advantage of it. So still playing it cautious on the long side this week. Likely no or limited long trades if I do decide to take any, but more likely I'll just sit on the sidelines. Even though the market conditions have recovered somewhat. Bitcoin and gold, a little bit different story. We discussed those separately. If gold continues to look good and you were to see a setup there, maybe that's where my trade would be. Bitcoin as well. We've discussed that at length, what's going on week in and week out over the last several months. So, that's those are possible trades there. They're not quite related to stocks, though, even though I include them in this analysis. So that's your weekly outlook for May 13th. I hope you have a great trading week out there.